Chancellor of the Exchequer Philip Hammond's autumn statement had been so widely discussed in the press before today's release that the Treasury looks more like a colander than a government department. But it does contain some issues of which you should be aware, with both your pensions and your investment portfolios in mind. First, from a personal finance point of view, the good news is the Chancellor made no changes to pension tax relief. Even salary sacrifice will remain protected for pensions, even if some other salary sacrifice schemes, such as mobile phones, will now be subjected to the same tax treatment as cash salaries. Other good news for savers comes in the form of a new savings bond, which will be issued via National Savings and Insurance next March. It'll come with a gross interest rate of 2.2%, although the maximum you can invest will be £3,000. The pensions triple lock is also safe for this Parliament, but it may well come under review in the next one. From a financial market point of view, the plans to invest in roads, railways, broadband and 5G mobile services had all been well treaded in advance, as the Chancellor set aside something like £10 billion to boost productivity and encourage patient capital to fund the technology and innovation winners of the future. The major mover on the back of all of that was urban regeneration expert MJ Gleeson of FTSE small cap stock, whose shares rose 5%. The builders and brickmakers were largely unmoved, although on the broadband side, alternative fibre network provider City Fibre Infrastructure, AIM quoted, also jumped 5%. Infrastructure player Renew Holdings rose 3%, though that could have been just in response to yesterday's strong interims. Other sector names like WS Atkins, Kier, Hill & Smith and Balfour Beatty did little, having done well in the run-up to the statement, while AIM quoted rail signalling expert Traxys also held firm. The Chancellor's announcement of an increase in insurance premium tax from 10% to 12% had little impact on the car insurance experts. Admiral, AA, Direct Line and eSure all slipped a touch, but not by much, possibly welcoming the attempt to clamp down on whiplash claims and on what Mr Hammond termed the compensation culture. Those stocks which did move the most today were losers. The quoted real estate agents saw their earnings come under attack from the Chancellor's plan to abolish letting agent fees. Shares in Beaver Lettings, Foxtons, Countrywide, LSL Property Services and Martin Co all found themselves out in the cold, with the first four falling by between 6 and 8% and Martin Co by a couple. Meanwhile, Royal Bank of Scotland stock drew little succour from the news the government has abandoned its plans to sell down its stake, at least in the near term. The shares fell 2.5% to 203p, way below the government's in price, which is just over £5 a share. And there's just one final point for those of you overwhelmed by the combination of a detailed autumn statement and then a full budget in March. The budget will move to autumn in 2017 and the autumn statement will become a spring statement in 2018. Although the Chancellor says the spring event will be downgraded to just a review of the Office for Budget Responsibility's forecasts for the economy and no longer feature major changes to fiscal policy, unless circumstances dictate. So thank you for watching, and I look forward to seeing you next time.